In this video, I'm going to show you how investing in the stock market works and also let you guys know the two main ways you can make money investing in stocks. Hey, what's up guys? Andrew Ferguson here from The Inconomist on a mission to help you guys learn how to invest in stocks and real estate to create wealth in your life. If this sounds like you're kind of jammed, consider subscribing, but let's dive right into how the stock market works and how you can make money investing in stocks. A lot of times people that are getting started in the stock market, they're going to ask, how do I invest in stocks? But before that, you should know and have a basic understanding of how the stock market works and what an actual stock is. So starting with the basis of what stock is, it's basically a fractional share of a company that is sold on a stock exchange. There's a common misconception out there that you buy and sell stock, but you actually buy and sell shares of a stock. And shares are what you're actually controlling, but stock is the general term that most people associate it with. When you go out and buy a share of a stock of a company, what you're doing is buying a little tiny piece of that company and adding it to your portfolio. Now, why would a company do this? Well, in order to raise more capital. In order to grow and expand and continue to deliver better and better results, companies need money. And instead of waiting for their products to sell or for their innovations to take off, they can do what's called stock offerings and offer you and I, the investor, different shares that we can then purchase. That money goes back to the company and they use that cash that we have given them to further expand and grow their business. So you guys know now what shares of a stock are. Let's talk about how you can make money as an investor. There are basically two different ways you can do this. The first being what's known as capital gains. And when you hear the words capital gains, it's just a fancy way of saying buy low and sell high. You want to buy at a discount and sell it for more than you paid initially. Maybe you bought a share of a stock for $100 and you went on and sold it for $200. That is $100 of profit, and that is known as a capital gain. That's the typical way that most people make their money in the stock market, is through capital gains. The other major way that people make their money is what's known as dividends. When you hear the term dividend, you can think of a small payment that a company makes to its shareholders on a quarterly or a monthly basis. Generally, they're paid out 4 times a year in the 4 quarters, and they're paid out by companies that are profitable. Sometimes even when companies have bad years, if they have enough capital in the bank, they will continue to pay a dividend no matter what. Now, in terms of capital gains versus dividends, which one's better, which one's worse? It all depends on your individual scenario, but I will say that capital gains, there is more room for growth and expansion and better profits in a shorter amount of time because there's more risk associated with going for capital gains, whereas dividends on the whole is considered a more safe long-term approach with less risk and therefore less potential profit. Investors often want to get a good balance between capital gains and dividends when they go to invest in a company. Some investors who like a little bit more risk will actually just look at capital gains exclusively and just want a company that's going to grow. Whereas other investors who are a little bit older, maybe a little bit more mature, or want less risk in their portfolio are going to focus on companies with less growth potential, so less potential for capital gains, but a high dividend and a high consistent dividend, one of the dividend aristocrats or dividend kings with continual payment and payment increases for 25 or 50 years. With either method, the focus should be on getting rich slowly over time. This whole method of getting rich quick doesn't really apply in dividends at all, and it definitely can happen in capital gains, but it's very, very risky if you go down that road. The best solution, the best way to do it is just to have compounding gains over time and build up your portfolio slowly with long-term growth. So guys, now you guys know how the stock market works, how you can profit in 2 different ways as an investor. Stay tuned for part 2 of this series. It's all about investing in stocks for beginners. Make sure you guys like this video, subscribe to the channel, and turn notifications on so that you guys will get the second part of this series when it drops. Thanks for checking out the video today, and keep investing in yourselves.